Hello, and welcome to the podcast series from Luxoft, where we discuss the latest technology trends with IT experts and consider their impact on business and consumer lives. My name is Sam Horrell, Marketing Manager at Excelian Luxoft Financial Services, and today I'll be your host. I'm joined by my colleague Stefan Negrila, the Global Head of the Regulatory Practice at Excelian. I'm also joined by Archit Mishra, a Senior Analyst at the Everest Group who provides IT services to the banking, financial services and insurance industries. In our previous episode, we talked about how the regulatory landscape is changing and what financial services organisations can do to survive the storm. Today, we're going to discuss how financial services can transform the burden of regulation into innovation and opportunity. So Archit, to kick off, how do you see digital playing a role in the risk and regulation landscape?
That's a very interesting question. Rise of digital technologies is one of the key influencers shaping risk and regulatory compliance requirements in the banking and capital markets industry. Globally, regulators are building a technology-led compliance and risk management roadmap for BFS firms by undertaking initiatives such as balancing the objectives of promoting technology adoption and ensuring customer security and market integrity. They're also investing in digital financial infrastructure and coordinating and orchestrating the innovation landscape. Automation and digitization to enhance human interactions, efficiency and compliance are also being witnessed. Digitization of risk and compliance management processes, managing new risks that have emerged due to these digital technologies. New business models leveraging AI, blockchain, and cloud have come up. Cybersecurity has become one of the top 3 priorities for C-suite at banks and capital market firms. AI and big data investments are helping build the competitive advantage for lead steers, and RegTech ecosystem is growing rapidly.
So Stefan, tell us more about AI. How do you see that impacting the regulatory landscape?
Sure. On AI, I feel that we're at a sweet spot. We have an abundance of data through regulation and other business activities. We also have an increase in supply of computing power and decrease in cost. So AI is becoming very efficient, and there's an opportunity for our clients to use that. What we've seen in the past is that new regulations has caused our clients to increase their compliance staff and vastly increase their costs. So there's a lot of opportunity for automation. In KYC algorithms, there's an opportunity to look at background checks and identify those that are suspicious and require further vetting. As far as anti-money laundering, there's an opportunity for AI to look at suspicious transactions, but not only that, also visualize relationships between entities. But there's also a negative aspect of AI as well. We have to be a bit careful. There's potentially a lack of transparency for individuals and regulators due to the black box algorithms that are used in AI decision making. Additionally, overtraining machine learning algorithms on past events could potentially make them susceptible to missing new events in the future, different types of issues. At the same time, we could have different entities that could become systemically significant and outside of the regulatory mandate. So this is something that is going to evolve over the years. At the same time, though, AI could also solve some of these problems. So there's potential.
And Archit, I'd be interested to know from your perspective how you think AI is impacting this.
We see enterprises adopting artificial intelligence, machine learning across different elements in the entire risk and compliance value chain, be it front office, empowering investment managers, financial advisors, or back office in areas such as document management or reconciliation. For example, chatbots to improve experience of the compliance team, providing on-demand access to data and insights, is enabled through chat or voice-enabled interfaces. We even see chatbots being used as a primary CRO tool for data collection and communication. There's AI for eKYC in financial crime management for identifying fraud. AI is being used for automatic reporting. AI is being used for suggesting best fit products for clients. Machine learning is being used for fraud detection and prevention. And AI is also used for monitoring risks across different products and lines of businesses.
Okay, that's interesting. And Stefan, I think moving away and moving back to the Confessions of a CIO report we discussed in our previous episode, another finding that we had was that IT decision makers within the financial services organizations are worried that their more agile competitors will beat them to it, and their biggest regrets are failing to implement strategies to address the regulatory storm sooner. So what would your advice be to those feeling this kind of pressure about the competition?
I think it's a valid point. However, regulation also has benefits. Regulators are an imperfect proxy for their clients, so it's important to look at regulation and really understand the goal of it. Generally, regulators want the same thing as their clients: transparency and fair treatment. So there's an opportunity not only to implement regulation, but also rework their systems in that direction in a way that could also benefit their clients. It's unfortunate that some of the firms are a bit behind the storm in relation to their competitors. However, with the right focus, by implementing the right solution now, they can leverage lessons learned from their competitors. They have an opportunity to really think strategically in both regulatory solutions, but also identify client needs and build them in. Additionally, and again, I don't think this happens often enough. I think there is an opportunity for our clients, for large banks, to partner with fintechs and regtechs to bridge this gap, to bring in knowledge in-house. In my view, banks build many commoditized, non-strategic, non-value-add systems, and there's a good way to move from non-core activities by leveraging partners.
Okay, and moving on from that, and we mentioned AI as being a kind of key technology that's having quite a big impact on this. What other innovations are clients looking to implement and to solve their challenges?
We've worked on a broad spectrum of solutions for our clients. For instance, we've seen an increase in cloud computing initiatives. There's a demand for new analytics for thus computing power for CVA, FVA calculations. Also, we've worked with them on visualization tools, specifically around BCBS regulation and those types of reports. We've also looked at using containers and DevOps for our clients in their MiFID II implementations. We see a trend towards cloud computing. We see firms moving in that direction and using more and more new technologies to gain efficiency. For instance, we've seen that serverless technology used by Fannie Mae, which is one of the largest U.S. mortgage companies. It was created after the Great Depression to facilitate homeownership in the U.S. They run 10 quadrillion cash flows on a monthly basis using serverless technology on their 3.5 trillion mortgage portfolio. And what they've seen is that using serverless, they've increased their performance 3 times. We expect more of these types of technologies or technology uses to come.
Okay, and Archit, I think Stefan's already given us one, but can you provide us with some use cases that you're seeing and the success indicators of these technologies?
Sure. Well, to begin with, the first use case is for a European bank that experimented with AI and natural language processing. They used Agile Scrum approach together with Lean Startup methodology, launched an AI-based solution for financial advisors that helps financial advisors offer best products, handle client queries, and comply with regulations, all at a very low cost. All verbal and non-verbal communication between customers and their financial advisors were captured in real time. And AI and natural language processing were used to enhance customer experience and drive down costs by digitalizing face-to-face conversations. The second one is shared KYC using blockchain. blockchain was leveraged to create a decentralized and encrypted customer information documents repository. Once the KYC process is done by one bank, all other banks can access existing customer information documents on the network. This was done by one of the leading banks in Australia. The third use case is on KYC process using AI. Global bank that wanted to enhance its KYC process. The solution was offered on a shared utility model, leveraging proprietary AI platform on a business process as a service offering. There are other use cases in terms of digital onboarding. There are use cases of cognitive technology being leveraged as a document reader that saves back office effort. And there are various other use cases of AI being done to detect fraud. To your second part of the question on success indicators, following metrics are used to measure success of some of these use cases. Amount of human effort saved, reduction in operational cost, improvement is in quality of processes, time to market, amount of data processed or reports generated in a particular time frame, accuracy of prediction, and lastly, reduction in total cost of non-compliance.
All right, great. And Stefan, can you follow on from this, provide us with some use cases you're seeing and as Archit was just saying, the success indicators?
Of course. So following up from Archit's example, robo-advisory is a use case as well. I'm actually also a client, so I've seen this work firsthand. In addition to what Archit mentioned related to AI enhancing a financial advisor's ability to provide a richer experience to the clients, we also have AI automating this whole process. So for certain types of clients or for a certain portion of one's portfolio, AI algorithms and tools can actually take over the whole process, build a portfolio, and maintain it going forward. As far as success factors, it really comes down to the business case. We do need to cut costs and become more efficient, if not in the short term, definitely in the long term. A lot of these technologies get us there. And we've seen this manifest itself on projects that we've done for our clients. Also, speed is important. We've seen an increase in efficiency, which is helping our clients reduce their time to market. And this is not only in building new applications and making that process more efficient, but also in speed with which information goes through the system, so they can beat their competitors to the trade in the market.
Thanks, guys, for sort of explaining the innovations you're seeing clients are putting together to solve the regulatory challenges that they're facing. To find out more, please visit www.excelian.com.